How I know when I'm getting overconfident with my trading. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to be talking about how I know when I'm too overconfident with my trading and how I have worked towards combating that and staying focused on just on the process. And first, one of the biggest ways I know is when I'm trading too much or if I'm taking frequent trades. So, you know, in the past I've probably beaten up on a trade, and I'll go back over the weekend and come back on Monday and be really focused on sticking to my rules and sticking to the process, and I'll get a really good trade. I'll execute the trade process and the trade will be profitable, and because I've been beaten up a bit, I'll exit based on my PNL, or I'll do something that's, it moves 100 pips so I get out, but the trade might be a 250 pip trade, but I'm glad that I got some money off the table, and then right away I'm trying to get back in the market and scalp on a 5-minute chart to make 20 pips. Just little things like that, and that's when you're overconfident, or you've had a couple of good trades and you sort of get into the headspace where you think that you're in tune with the market, and then no matter what you'll end up getting out of the trade with some money. So trading too frequently, not coming to the screen fully prepared with the instrument that you're trading. So showing up, turning the screen on and looking at the chart that you're, bringing up some charts and looking at a chart, and bang, you think you see a trade right away, and getting into the trade instead of having properly worked it up and being able to identify an asymmetrical risk-reward opportunity. And perhaps sometimes you may actually be seeing that right when you get on, and there's nothing wrong with that. Taking on too much leverage, jumping into a trade that's not in your trade system. So, trading on a 5-minute chart and you're a 4-hour trader or an hourly system trader. Not being emotionally oriented, meaning that you're impulsively exiting or entering the market. Could be based on your P&L. It's not based on the exit strategy that you've built your system on. There's lots of little things, again, not journaling your trades, just becoming complacency versus confidence. And I think that's really important to have a checklist to ensure that 80% of the time you're process oriented, and most, maybe more so, even 100% of the time, just ticking the boxes, sticking to the process, sticking on the business side of it. It's a business, you're a risk manager. Every day you go to work, you have a job to do. When the trade presents, you execute your trading system, you manage your risk, you place your orders, and whatever happens, and then you go back home for the day, and then you go back to work again the next day and do it again. If you've got a positive expectancy over time, over those data points as they built up in your system, you're going to be making money if that positive expectancy is there. If your money management rules entail you'll be scaling into winners or scaling out of losers, or losing less on your losers and making more on your winners. And that's what I'm really focused on right now, is managing those trades, sticking to the measured moves, extracting the most out of the winners that I can, and tightening up my losses as small as possible. But I have the checklist, and as always, I'm always constantly tweaking little things. Every day that goes by, you learn something. You review things. You think you've got your system down, and then bang, the market will throw something else at you, and you'll be like, okay, yeah, I guess But I'm all about simplification. Simplify. Make it so that there's no analysis paralysis. You've seen most of my charts, they're price only. Occasionally I'll pop some things on there just to take a different perspective on the chart, but I'm always looking at price and using measured moves, because that way it's very simple. Like Peter Brand, he's a breakout trader. breakouts, if they're successful, don't fail, so that he's willing to take the loss on the small breakout, and when he gets a measured move on those trades, he's getting 5, 6, 7 times his risk. So keep it simple, stick to the process, have your own way of looking at your demon finder. If you're over trading, if you're becoming overconfident, and again, complacency versus confidence. So don't become overconfident. I've made all those mistakes, and I fight the demon every day to not repeat them, and make the rest of your trading the best you're trading. Have a great trading week. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.